So considering the information that we have available on home sales and possible interest rate cuts throughout 2024, could this mean the Canadian housing market has finally bottomed and is about to see a reversal? Let's find out in today's video. Hey, what's going on everyone? It's Griffin here, and as the title of this video would suggest, Canada's housing market is starting to show some signs of a slowdown as home sales increased for the second consecutive month in January 2024, rising by 3.7% after enduring a 6-month consecutive decline in terms of number of transactions, and is also up 22% over figures from this time last year, which might seem like relatively bleak news actually for millions of Canadians still waiting on the sidelines and renting since the pandemic, seeing the market gear up again for interest rate cuts. Now, it's important to mention that this resurgence in sales that we're experiencing as of late has effectively brought the market back down to levels that we were seeing as of late summer 2023, suggesting a potential end to the sharp correction that was triggered by soaring interest rates during that period and still to this day. And what's interesting to note is that despite the number of transactions remaining low relative to values seen over the past 3 years, prices have still remained quite stable Canada-wide over the past 6 months, which further tends to confirm a stabilization before potential future increases. And when drilling down on specific metropolitan areas, we can see this phenomenon firsthand, starting with Toronto's average sold price having fluctuated between around $1 and $1.2 million since August, despite seeing a massive drop-off in transaction volume. Montreal's average sold price has increased since January 2023 and remains still very stable despite a huge drop-off in sales volume. Vancouver, on the other hand, has seen a similar situation to Montreal's market, with stable average sold prices but slipping transaction volume as well. While finally Calgary's market remains strong and on a steady incline, as indicative of other Alberta metropolitan areas as well. So considering this data, it's not out of the question to anticipate that a bottom in prices could very well form around mid-2024, while projecting a gradual appreciation from there in the national benchmark price during the second half of 2024, which is considering that there's been a slowdown in new listings growth in January 2024 and more sales than new listings that are actually being brought to the market. And what's more is that as the Bank of Canada strives towards their target inflation rate of 2% sooner than initially anticipated actually, well, it's not out of the question that we could see interest rates starting to slide in the third and fourth quarters of the 2024 calendar year. In fact, unexpectedly lower inflation figures have heightened skepticism about the Bank of Canada's relatively conservative projection regarding the timeline for the Consumer Price Index to have reached its target, which as of the Bank of Canada's January monetary policy report, it stood at a 2025 estimate for when they believed the 2% target would be reached, at which point interest rates would start being cut. However, Taylor Schleich, a rate specialist at National Bank of Canada's financial markets, expressed a contrary view in a note dated February 22nd, asserting that a clear trajectory does exist right now for achieving the 2% target by the third and fourth quarters of this year. Of course, this is mostly speculation at this point, but if history indicates anything that may happen in the future right now, well, the Bank of Canada tends to be quite conservative with their statements and timeline estimates, so projecting farther out than what may actually happen in reality. All right, now despite the market balancing out right now, there's no denying that affordability affordability challenges persist for millions of potential buyers and even people who have purchased over the past couple of years, and will remain problematic even if interest rates start to decrease in 2024. And this is to be expected because with an average house price across the country that still remains quite high at $660,000 right now, as we can see right here, well, as interest rates start to come back down gradually, bringing more buyers back into the market, inventory remains relatively low and won't miraculously shoot up. Shout out to permit issuance challenges and timelines. But the reality is that although buying power goes up with lower rates, increased purchase price puts buyers in a similar situation in terms of monthly payments. In fact, Olivia Cross, North America economist with Capital Economics, notes that even with expected aggressive interest rate cuts over the next year, affordability will remain more stretched than in any period since the 1990s. And yeah, I would tend to agree with this and have spoken about this expectation a handful of times on my channel already. Affordability in Canada will remain extremely difficult for new buyers specifically, regardless of high or low interest rates, as they tend to have an opposite correlation with property prices, at least in the shorter term they do. And here's an example to illustrate this point exactly. If you were to buy a home right now at that current average sold price of $660,000 with 20% down over 5-year fixed rate of 5.5%, and that's over a 25-year amortization, well, you're looking at a down payment of $132,000, which is by no means a small chunk of change for most new buyers, and then also a monthly mortgage payment of $3,242, of which only around $830 is equity in the first year. Now, when and if rates do start to drop, even in say the 4% range, but prices increase in the waters of, let's say, around $100,000, which honestly wouldn't be out of the question, well, at $760,000 with a 20% or $152,000 down payment at 4% interest over, 25-year amortization, the monthly payment does drop to $2,750 at $1,000 worth of equity, but the problem lies in that extra qualification on nearly $80,000 more worth of debt, which could be difficult to achieve for many new homeowners who aren't necessarily exploding their income in the time being. Okay, now despite the current trends that we may be experiencing right now, realistically, we need quite a bit more than only 2 months worth of data to actually have a good idea of the direction the Canadian housing market is heading. But what's almost certain is that considering new developments significantly lacking relative to population growth, a stabilizing house price benchmark and interest rate cuts on the horizon for the end of 2024, it's not out of the question that we'll see the housing market bottom in and around the next couple of months before steady inclines once again. And I'm not the only one to think this. Here's a chart made by RBC Economics predicting a steady increase in home sales quarter after quarter through to the end of 2025, mainly taking into account the factors highlighted in this video. So as it stands, this isn't great news for new homebuyers looking to make a move in 25 and 26. And although it's nearly impossible to get perfect timing, if you're able to buy a property while rates are on the decline in the second half of 2024 and before prices heat up even further, that would be the sweet spot. But if you're someone who does already own a home with a mortgage renewal coming up in 2024, 5, or 26, then you absolutely won't want to miss this video that I made speaking about what you should be doing to prepare for a rate renewal that will probably be quite a bit higher than what you're paying right now. So don't miss out on that one. So thanks a lot for watching. If you enjoyed today's video, make sure to drop a like. Only takes a second and really helps the channel out. And consider subscribing to see more content about the housing market, personal finance, and other Canadian related topics. Thanks a lot for watching, and I'll see you in the next one.